The Valley real estate market is showing no signs of slowing down. There are things both buyers and sellers need to be aware of to protect themselves in this kind of market. And having an agent that understands how to operate in this environment is vital to your success. I'm Ruth Nastasi with AZ & Associates Real Estate Group with this month's market update. The continued lack of inventory in our market is not due to a lack of listings. It's due to a huge increase in buyer activity related to attractive low interest rates, growth of Valley population, and outside investors looking to increase their portfolios. To compete in this market, we're seeing buyers take measures to snag a new home that can cost them and sellers in the future. One tactic we often see are buyers submitting personal letters, which include pretty family pictures, which seem innocent enough. What many of these letters subtly provide is information regarding the buyers, which could indicate they belong to a fair housing protected class. Let's say a seller chooses a family over a single person, or selects an offer not on its merit, but based on one of the protected attributes. Both the seller and the agent may be at risk of a federal fair housing violation, which can carry up to a $16,000 penalty for the first violation. Buyers and their agents should not offer, and selling agents and their clients should not accept personal letters. To stand out in a multiple offer situation, a buyer may choose to waive some of their rights in the transaction, such as skipping an inspection or waiving an appraisal. Doing so can lead to huge unforeseen costs. Buyers should weigh the risk and get professional legal or financial advice before doing so. And speaking of appraisals, sellers asking for higher prices in a growing market is not unusual, but if the buyer is getting a loan, the house will have to appraise for at least the sales price. If the house fails to appraise, the buyer has a contractual right to cancel the contract, renegotiate to the appraised value, or pay over the appraised value. There's cost to both parties when this happens. If the contract gets canceled, the money for the appraisal and the inspections is already spent and is not recoverable. And the seller is obligated to another month of mortgage, taxes, and insurance costs, and now has to find another willing buyer. In the case of an FHA or VA loan, that appraisal stays with the property for up to 6 months and can hamper future FHA or VA buyers as well. Understanding how to manage multiple offers and the challenges for both buyers and sellers in a market like we have now takes knowledge, experience, and a trusted advisor. And that's me. I'm Ruth Nastasi with AZ & Associates Real Estate Group. Don't get stuck with an average agent.